afternoon, ladies and gentlemen. Today is the 21st of April and the time is about 3:50, and today was the expiry day. Now, I've not been posting videos for a couple of days. It's because I've been on semi-break from intraday trading just to unwind a little bit for a while, and also because I didn't find the environment super favorable. So I've not been trading very often. Of course, I did this month has not been so great for me so far. I am currently a little more than 1% down. So I'm about 6.5 lakhs down for the month. The reason for that is basically, first of all, I've not been trading much. Last expiry also I didn't trade. If you follow me on Twitter, you see I sold a call option for 1.5 rupees, and that's the entire thing that I did. I was just not in the mood to trade, especially when things don't look very favorable in lower IV environments. Also, I'm working on a few other things, which is one by the end of this year. First of all, I want to test automating strategies. So I want to test different strategies out and see how I can automate them and eventually have it built, host it myself on a cloud and sort of run that in a way that at least about 20% is what I'm targeting. That at the end of this year, if 20% of my capital can run on automated, non-correlated strategies, that's something that I would like to do, because the more and more you do intraday trading, it's just not scalable very well beyond a point. So that'll give me a little bit of diversification. I've also been trying to diversify into some positional trades, which have not gone so great so far this month. If you follow me on Twitter, you know I booked 3.7 lakhs loss on Infi trade after it crashed. I booked a loss on HDFC as well into the crash. Actually, on the upside, when HDFC made that move, I ended up losing on the Nifty because of that. And then on the downside, also HDFC positionally I lost. So it's not been great. But despite all that, I think it's just come down to position sizing and risk management where I exited my trades. That so far this month, just about like 1.2% in the negative. So anyway, today was the expiry. It was all right for me. I didn't really, it was never going to be an expiry that I made money. So it was a steady trend, and I'm always neutral on expiries too, more or less neutral all the time. And generally, I try to trade in favor of the gap. So if there's a gap up, I will think that, you know, people who are, and that was, we had a period of volatility some time back. I think maybe if you look back 2 to 3 months back, whenever there was a gap, then the market would move towards the gap. So if it's a gap up, then you'll see some amount of profit booking, or a gap down, you'd see some amount of removal of shorts, like short covering, like a little bit. Whereas lately, this month has been such, whenever there's a gap, it continues to move in favor of the gap. So that is a little bit different. Anyway, the premiums were dirt cheap. I had no interest in trading. To be honest, I didn't think that 17,300 would be taken out this expiry. So the expiry, I made about 60,000 profit. I also entered a double diagonal trade. I posted the payoff of this trade. It's not your typical double diagonal. So this is the trade. It's not your typical double diagonal. It will I've structured it in a little bit different way. So it's like a ratio diagonal at the main trade, and then there is also hero hedging, which is in case there is ever a massive gap, then the increase in IV will really benefit my position. But it's also like it's like a hail Mary trade. If you open 2 circuits down, this position will make me insane profit, like probably on even this sizing, it would make a huge profit. So anyway, that is that. I'm trying to diversify into positional trades where I put between per trade, if it is on a stock, not more than 3 to 5%, and if it's on the index, not more than 10% of my margin into positional trades, so that I have once again diversified myself that way. And it'll always be either I'm long IV or I'm short IV. In this case, it is quite IV neutral if you look at this particular trade. So anyway, that's what's been happening. I will anyway, by the end of the month, I will post a summary on what's been happening and how things are going. But as long as I'm not super actively trading intraday, I will probably not be putting out videos on a daily basis. But I will trade on Wednesdays and Thursdays. I will make videos there. Yesterday, I just took a position. It hit stop loss and I exited. So I just posted about it on Twitter. And today the order book is also there in Telegram, which I forgot to post today's order book. So there was this guy who did a very nice analysis on my order book. So every day I post my order books here, and if you search, go to files and you search for orders, you will get the entire list of orders for each day that I've traded. And there was this person who did a really nice analysis on it. So in case you're interested, it's about 9 pages. Um, yeah, so this is the analysis that he did on it's very interesting. So he looked at all the different days that I've traded, what was the trading day like, how what is the effective net one on different days, how is it distributed, all of that. So in case you're interested, you can always take a look at that. Anyway, I'm digressing completely. Let me get into what happened today. So today we opened gap up. First of all, on Tuesday, the weighted average closing was 16,950, but actually spot basically went to 16,800. From there, we had a gap up yesterday. This particular part took me out when we had this breakout. I had a bad entry here because I had a bearish view. I was trading in favor of the gap, or at least some consolidation here. But got taken out here. Had to give a stop loss. That was the end of the day. It was a difficult trading day. If you go through the Twitter thread on it also, you'll understand exactly what happened. Today again, we opened gap up. Now this time, look, we had this resistance, and sometimes I feel I should take my own advice because I had posted about it also that it will be a difficult day on the upside. Like there's a chance for there to be a complete burst on the upside, which is exactly what happened. We had multiple times resistance over there. So if you see, yeah, so here I'm like, there was a lot of 16,200 call option open interest, and in case that starts to get covered, then we will have huge upside risk, and that's exactly what happened. I entered initially a very risk averse trade. So it was my first trade was shorting the 17,350 call and 1750 put for about a little more than 12 points of credit. After that, once we had this up move, it was all about just trying to take risk off on the call. Initially, I was expecting 17,300 to hold. Once that didn't hold, just had to move my calls up from 17,300 to 17,350, then 17,400, and then 17,450. And at the same time, at all points, my put option was positioned such that it had basically slightly less than or equal to the premium that my call option was trading at. Eventually I gave up. Like here I really gave up. I was still trying to end with about 10 to 15 points of profit. This move I really gave up because like that just didn't make sense anymore. I was not comfortable. There's no premium, but we're just steadily heading higher and higher and higher. So I just closed my position here and sold about 2 rupees and finally closed it slightly better than break even. So from my intraday trade, it was about 60,000 profit. The other is coming from the diagonal, which it is showing. So it was just a day where if you're a neutral seller, really, like what can you really do? You can't do much. If you had a bullish view, great. If you had a bearish view and you held on to it, you got butchered. So a neutral trader also technically in this market, like this kind of a move, more or less, you're not going to make money. So I'm quite happy with that. I'm very happy with the outcome. I know that okay, this month first of all hasn't. I'm not in the green, right? So, but that doesn't put any pressure on me because it doesn't really matter. I cannot make money in every kind of market, and this market is not great for me to make money. And also, what's happening? So many days that I'm sitting out, people come back and say, "Oh, today was an excellent day to strike." I know that. It's just that at this point, I want to take a break. The break doesn't necessarily mean that it's only because of the trade setup not looking great. That's part of the contribution. But at the same time, by taking it easy for a while, I don't put unnecessary pressure on myself. And also, like this is where it helps when I say that I don't have targets. So because I don't have a target, I don't feel any urgency that okay, I have to end this. I have 24 months running in green. There's no urgency that 25th month also has to be in green. If opportunities don't present themselves or I'm not in the correct headspace to be trading, why would I not be in the correct headspace? Basically fatigue, right? So you get fatigue. It's a very mentally tasking profession, and for whatever reason, right, you can be fatigued, and at that point you'll save more money by not trading too actively. So it's been all over the place. I think basically Infi, HDFC, Reliance, and these names have really made the index random. Like actually 16,800 on Tuesday to, and at that point of time at the money straddle is trading at something like 250, right? At two expiring at 17,400. This is a very, very tricky, very choppy market. So it's a difficult market to trade. And in this period, I'm happy not to be exposing myself too much. So that's about it. That's the summary for the day. I think basically, unless you took stop losses, if you were neutral, the trick was you had to take stop losses on calls quickly, because no matter how adamant one would have been, like yesterday, 17,200 was looking like a very, very viable expiry spot, simply because that's where we broke down to, that's where we pulled back to. A lot of 17,100, 17,200 positions. Sorry, yesterday I would have thought 17,100, not 17,200. Lot of positions there, whatnot, huge amount of open interest at 17,200 call. People might have actually expected 17,200 itself to hold, but we're ending 200 points higher than that. So if you took your stop losses in time, you would have survived. If you didn't take your stop losses in time, you would have got butchered on the call side. So it is what it is. And yeah, positional trades. I had a trade on Reliance, right, which was a covered call. I actually booked that in profit because I had made it a strangle, and then I exited that position and rolled over my call to the May series. This is bleeding now, but it's fine, still out the money. Apart from that, I'm carrying one trade on ITC, which is doing well, because initially ITC covered call was losing me money, and now after adjusting it and dealing with it, because ITC IV had gone up very, very high, it is now making a profit. Now the idea here will be, tomorrow if ITC is flat or positive and ends somewhere towards towards here, then I will carry this trade probably till Monday and close it. If ITC is in the negative tomorrow, or the market is down tomorrow, then I will just be closing this by the end of tomorrow. Anyway, that's what's happening, and that's the summary. I will catch you at the next video. Thank you so much for watching. I hope you've been having a good trading day. I know some people have been having, like, April has been excellent for many people. But I know some people also who are not having such a good time in April, finding the choppy market very difficult. So in case that's what's happening to you, ease off a little bit. Like, not every period is going to be great for you, and you can't constantly think of how to win all the time. Because sometimes it's just not, it's not anything that you're doing, it's just that that particular phase of the market is not favorable to you, and in that period your only responsibility is, even if you're losing, like, lose less, right? Lose less, keep those losses in control. Like when I squared off my HDFC position or my Infi position, so I spoke about why I'm not adjusting it and why I'm squaring it off, because sometimes the best adjustment is to exit. Yes, you're losing on that position. Yes, if there's a reversal, you'll immediately be making a lot, but it's not worth the headache, because if I had made further adjustments to those positions, I would be further losing. The way they've been moving lately, it's just, and the implied volatility and the premiums on those stocks do not make any sense to me. Like it really, I would think, how is risk being priced the way it is when they are moving the way that they are? So I think the best thing to do is cut your losses there. And yeah, that's about it. Thank you so much for watching, and I will catch you in the next one. Take care. Bye bye.